I'm excited to introduce our next panel session, which is focused around Asia investment trends, with topics such as the global investment climate and its impact on Asia, the investment methodologies of Asia's leading investment minds, advice for startups, and much more. Panelists for this session include Jeff Chi, who's a Managing Director of Vickers Ventures Partners and recently just listed their SPAC in the US. Gail Wong, Managing Partner at Hui Capital, who recently just made their first investment. Meng Thoo, Head of Investments at Leonie Hill Capital, and Hsien Hui Tong, who's the Head of Investments at SG Innovate. Fong Jek Gan, who's the CIO of Jubilee Capital Management, and it's moderated by Hui Jie Lim, who's the Founder and Executive Director at VisionGroup.
A very good morning, afternoon, and evening to everyone, and welcome to Emergence 2021. And today we have a really exciting panel, and we're covering the topic on Asia venture capital investment trends, and we're covering some really exciting stuff in the next couple of minutes. So before I kickstart the panel itself, we would like to have some of our distinguished panels to introduce themselves, and from there, we get a little bit of understanding on the background and what we're in for the next 1 hour or so. So to kick off the entire introduction, can we have Meng to introduce yourself and your firm?
Hi, everyone. I'm Meng, based out of Singapore. We are a family office-backed fund, pretty much investing into disruptive technology, and more important is to really look at the skill, how we could back you. We specialize in patient fund, and pretty much from a risk factor, we strive very hard to work together with you in the long term and create this joint partnership and help you drive beyond the technology world. And we've got a AUM of 2.6 billion. We have been investing across industry, but pretty much we like specific industry like healthcare, sustainability. We also invest into certain deep tech because of our LP background, so into the space, telecom side. And pretty much I manage the digital and the sustainability part of the venture business. So we'll be looking forward to see how we could work together with all of you ahead. Thank you.
Thank you, Meng. And next up, can we have Gail to introduce yourself?
Sure. Hi, everyone. Good to be here. Thanks for inviting me. I'm a managing partner at Hui Capital, and we're a Singapore-based seed stage gender lens VC. So we invest in companies with at least one female founder operating in or entering Southeast Asia. We're here to exploit an arbitrage that we see. Women lead 1 out of 3 businesses, yet 3% of VC money goes to female-founded companies. And when these companies are funded, they outperform the market in terms of returns, capital efficiency, and exit timeframe. So we're a female-led fund. We've been angel investing in the region for a number of years already on the same thesis. And we're currently fundraising our first fund, so quite a different stage from some of the folks here. We invest broadly. We have B2B holdings as well as a number of consumer-type businesses that we look at.
All right, thank you. And next up, we have Jeff.
Thanks, Hui Jie. Hi, everyone. My name is Jeff Chi. I'm a founding partner at Vickers Venture Partners. We are a global deep tech firm. We invest in deep tech around the world. We believe that innovation is a global phenomenon, and therefore we need a global base to evaluate deals from. I like to describe our businesses as finding breakthrough technologies that solve global problems, because attached to a global problem is a very large market. Also attached to when you solve for a global problem, you are doing something good for humanity. So certainly on the impact and sustainability side, we're very focused as well. I happen to chair and act as CEO for our recently listed SPAC. One of the things that is a big trend in the market these days, and I look forward to sharing a little bit more with you guys in a short while. Thank you.
Thank you, Jeff. And next up, we have Fong Jek.
Hi, everyone. My name is Fong Jek, and I'm the founding partner for Jubilee Capital Management. We're a cross-border venture capital fund, started in 2015, and with most of our investors from China. And we were positioned to look at Chinese outbound capital entrepreneurs and technology that's looking to expand to Southeast Asia. We invest across Southeast Asian countries as well, including Thailand, Vietnam, Indonesia, and of course Singapore, and some in China. So over the last, we're into our year 6 right now. We run 2 funds. One is the, as I said, the early venture fund, which we invest in pre-A to early B. And we also have a blockchain fund, which is a shorter time frame. It's a 3-year fund. And happened that this year, Bitcoin price have gone up. The crypto market have been very buoyant. And we are at the closing end of our blockchain fund. We're looking to close the fund and now looking at the landscape of looking for new opportunities for the next step. So happy to share more later on in the conversation. Thanks.
Thank you. And next up, we have Hsien Hui.
Thanks, Hui Jie. Hi, everyone. My name is Hsien Hui. I think some of you may know me. I'm on some of the other panels at Emergence as well. I'm the head of investments for SG Innovate. We are a global early stage deep tech investor. We are wholly backed by the Singapore government. And the kind of companies we like to invest in are companies that are adopting emerging technologies to solve global problems, a bit like what Jeff mentioned in his intro. Although we probably invest a little bit earlier than they probably do. Areas of focus for us, we look at things like quantum technology, we look at areas like agri-food. Sustainability is obviously a big part of the conversation. I'm sure we're going to talk a lot about that later on. We also look at the biomedical space, therapeutics, how to address new biological pathways that are being discovered. And you can't escape the fact that we've got to look at things like smart manufacturing and how to make the world a more how to decarbonize our entire economy, the global economy. We've got about 90 portfolio companies from all over the world, and really look forward to having this conversation later on, listening to all the opinions of the other people on the panel. Thanks.
Thank you very much. And just a very quick introduction, I'm Lim from Singapore, and I run a group called VisionGroup, where we focus on future tech of implementing blockchain, AI, and cybersecurity to companies to future-proof themselves. So let's jump straight into the discussion itself. And I guess one of the first questions that I would like really bring out towards the panel is that we have been through a very tumultuous time over the last 12 months. What's your view from a global impact perspective of the investment climate? And how do you think that might actually impact Asia? And we'll kick off our discussion with Wei Ming to share a little bit on your opinions on that question. Sorry, Wei Ming, you're on mute.
All right. Okay. Can you hear me now? So I think this brand new world is giving really a lot of challenges, but yet a lot of opportunities, right? And fundamentally, for any of this entrepreneur who wants to create championship globally to solve world problems, I think the fundamental is still the same. And for us as investor, we really look at how we want to make sure that there is a sustainable funding to those partnerships that we will back on. And number one, the sustainability in funding is really all coming together with people like all of us, right? So in the past, we see that there's a lot of fund that will really be working in a very silo way and look at driving the deals. I believe personally that, the funding, this whole funding path is getting more difficult for many of these VCs. We are seeing a lot of VCs coming to us to raise new funds. But we're also seeing VCs that perhaps some of them will be able to even raise more funds, right? So this whole funding mechanism is constantly changing. And, VC like us, we really have to look at getting ourselves more specialized. I think horizontal play is still important, but vertical play will make a difference. And we think that COVID-19 has changed the way how the market drives, but also how VC will have to behave ahead.
Thanks very much, Wei Ming, and opening up very much the rest of the panel as well on some of the opinions on how 12 months investment climate really looks like, and how that's your view on how the global impact might actually impact Asia as well.
I think I'll take a stab at this one. Honestly, COVID-19 is something that everyone talks a lot about, and obviously it's done a lot of damage, socially, as well as to our own personal freedoms, as well, our ability to travel. But it's also created tremendous opportunities. I think the pace of digitalization has accelerated manifold during this period. The adoption of technologies that we thought were going to take years, from autonomous, delivery systems to online payments to, even ordering food online and all that. There are a lot of people who ordered food online for the first time during this COVID-19 lockdown, and that created huge, that accelerated the market adoption, and generally was very helpful for some companies that happen to be in this space. I think this will continue. This pace will continue because once you've formed a sort of habit to use these services, you don't just turn it off overnight because you realize that there's such a great convenience of it. So people's habits are going to sort of frame the discussions and the economy as we move forward. The second thing, which I think another global trend which we have seen during this period, obviously, is from a government perspective, the need for food security. So there's a lot more emphasis now on aspects on things like nutrition, yield, and more importantly, localization, because we don't believe that we can rely on the global supply chain of food to always be intact. If there's another pandemic. So that represents another opportunity for players in the market in areas like things like hydroponics, aquaponics, anything that can increase basically nutrition yield within a smaller space. And of course, the whole COVID-19 itself represents an entire ecosystem from manufacturing, research, supply chain, delivery, education. The list just keeps on going on. So I prefer to see the glass as half full, and that there are tremendous opportunities for investment in the coming year.
Thank you. And the rest of the panel, do you all have any inputs, Fong Jek?
Yeah, I'll just add a couple of points. I think there's three major changes I see from last year, say this time when the COVID just started and all knocking down, circuit breaker is just starting to now exactly 1 year later. I think three change. One, we say, let's say in terms of the consumer behavior change, I think I agree with what Hsien Hui has said. A lot of consumers are forced to kind of go digital. So digitization as a major trend has kind of accelerated adoption worldwide, right? Young and old, whether they like it or not, they have to go online. And that has boosted a lot of companies that were still testing out some of their new models, like online education, online finance, food, etc. So the digitalization trend, I think, has been established and is going to continue and accelerate even faster globally. Border restrictions are no longer a major concern. Second trend, I think, is in terms of the sentiment, right, among the startup or founders' sentiment. Last year, this time, for the larger part of the last year, I think a lot of companies were badly hit by COVID, especially those that were directly impacted because of lockdown. Like in some of my portfolio, they were, a couple of them were affected because of travel related startup and some events driven kind of startup. But right now, since the end of last year to now, I think the sentiment has flipped. As kind of people are a lot more optimistic. Startup founders are very optimistic right now because vaccination is going on globally, and I think people are more optimistic that now this year, especially year of ox, right, is giving a lot more positive boost to the sentiment. So I see more companies preparing for IPO, preparing for SPAC, like what Jeff is doing, leading the way. We see a lot more interest in business combination, even M&A, some happening to some of my portfolio as well. So this is the second trend. The third, I think, is investor preference or is attention, right? Investment preference change. I think right now with the US market, China market, Hong Kong market going very buoyant, except for the last few days when it's going through some adjustment, a lot of investors are going direct into the capital market. They would like to have more direct involvement, control over what they invest in. The EV trend is driving a lot of investor preferences. People who invest in Tesla get multiple X, 7X uplift. So this is a lot more faster and better than go to a private equity or a VC where the investment period is too long. So I think that's another major change I see. So just to answer, Hui Jie, this is my observation. Thanks.
Hui Jie, if I may add, I think if you think of VCs as investing in revolutionary changes, technology changing and transforming businesses or the way business is done, and the pandemic as a root cause to force people to change and a catalyst for change. Actually, on hindsight, the pandemic actually hasn't really impacted VC investments all that hard. Sure, there have been companies that have struggled through fundraising and all that, but generally, by and large, we've all been beneficiaries of big growth stories with this transformation of how society, consumers change their habits, right? Hsien Hui gave a few examples of that, but the whole online education movement, the whole online meeting movement, the whole e-commerce have all seen great impacts. I think there's some other things that have really happened as well, and one of this thing is a deep recognition on how closely we as humans are tied to society and this planet. And certainly you have seen in the last 12 months that the agenda of climate change, the agenda of sustainability has become very, very much in the forefront of this, right? And so you start seeing companies in the US, if you follow SPACs and all that, a lot of the SPAC mergers have been in EV companies. And as we move towards the electrification of vehicles, as we move towards the electrification of industrial equipment, as we move to finding alternatives to single-use plastics, these are all things that are beginning to change. And certainly as deep tech investors, we hope to play a role in that part of the ecosystem as well. So these are actually quite exciting times, I think, for VCs to play.
Thank you, Jeff. Any inputs from Gail, from your opinions from global impact towards Asia?
Well, we're sort of a pretty unique investment strategy. So in a way, it does challenge sort of norms and how people think about VC and the typical sectors or verticals one would invest in. And so, as I mentioned, we are fundraising as well as deploying capital, and it's interesting to see the dynamics there. I think on the LP side, with COVID and people triaging, navigating uncertainty in their portfolios, but also upheaval in their own lives, the willingness to look at new ideas has been lower last year. But there's definitely been a reset with the new year, some kind of psychological shift to more risk on this year. We're seeing deals closing. We just announced a deal today. And there's definitely a lot of opportunity, more so than, say, negatively impacted sectors from what we can see. And we're really excited about the future of work and what that can imply in terms of building more inclusive societies, which is obviously very important to us from our gender lens as well. But we do see the commercial opportunity there in terms of transforming workplaces, increasing employee engagement with the use of technology. That's one of the companies that we are investing in.
All right, sounds good. So I guess that very much with the pandemic itself, there are companies that might have been negatively impacted, and yet at the same time, there are a lot of opportunities out there. So zooming in a little bit more to Asia and towards the portfolios that each of the panel actually holds, please do share with the audience a little bit on what are you currently still investing in right now? What do you think might be the opportunities in the next 12 months? And what might be one key strategy you'll be focusing on that you think might be a winning strategy? So maybe we can start first with Hsien Hui.
Okay, thanks, Hui Jie. Well, I suppose that's a pretty broad-based question. We will continue to invest in our, the thesis that I mentioned earlier, which is in deep technology. But there are certain areas that we continue to be bullish in. But to better understand why that is the case, we probably have to see the implications of some of the global trends that I mentioned before. So I talked a little bit about digitalization, and definitely Fong Jek, Jeff, Wee Ming, Gail also alluded to this whole trend was digitalization, adoption of technology for automation. Now we operate within the deep tech space, so our focus is a bit narrower than just pure automation. We're looking really at the AI space, and we are saying, if AI is going to be more widely adopted, what needs to change? What else needs to change? Because AI in itself is definitely not carbon neutral. It consumes great amounts of power. Bigger data sets, is going to cause a lot more difficulty in processing. So we say, there are areas within AI itself that represent opportunities. Things like synthetic data is a big trend in the United States. The second one is more powerful sensors to collect more accurate, more contextual data. The third, obviously, is in the new AI chips that are coming up, low power, higher processing speed. Quantum technology also plays in that space, although we probably won't see a quantum chip for some years. And these are areas that I think we remain very bullish in, and that's just within digitalization. So I'm not even going to talk about all the other areas because there's just so many different spaces that we can talk about.
Thank you. And maybe Gail, would you like to put some inputs on and share what you're currently investing in, looking at, as well as what might be a winning strategy for you?
Sure. I think our underlying thesis around capturing the consumption trend in this region, right, the population growth and the digitization powered by urbanization, makes this an attractive consumer market. And we've seen and we like things around wellness and health. I think clearly after last year, the access to health through technology is important. It not only impacts lives, but there's an opportunity there. So it could be from something like televets to human medicine and diagnostics as well. As I think Hsien Hui said, like there's a barrier has been brought down, so people are now comfortable with consuming these services online, and there's an opportunity to distribute to this population that has a rising income and high technology adoption. This might be a very feminine thing to say, but I think we're also looking at things like human connection, because you can, we've all had to retreat indoors and find digital substitutes, but there are certain things that are irreplaceable. Care, for example, isolation of people. Some of this is a wellness health thing, but I think it also speaks to workplaces and companies shifting, say, budgets from travel to HR tech type of tools that are going to facilitate connection for a permanently remote workforce. That has knock-on effects, I think, not just for workforce of both genders, but for, say, employees who might be in transitions, including women and maternity. I think just sort of more avenues for engagement and inclusion in the workplace is interesting to us. And I think sustainability has always been on our radar, and that we do see innovation there. Again, raising awareness, allowing tools that allow people to measure and engage on that front is an important trend that we're seeing to start to come to market.
All right, thank you. Any input from you, Wei Ming?
Well, we see the opportunities in the whole economic restructuring. And I think, one needs to be remember that, this whole world is constantly changing. So if you look at this region, we are all looking at how US behave against China. And there's a lot of, like what I think one of the speakers mentioned, that, this whole supply chain reconfiguration, I think is a very important area where we as VC needs to really look at how to deploy this whole disruptive model into this whole structuring process. I think eventually it's all about boosting the productivity. And in Asia, we cannot be living in low cost forever. So I think this is a time where we will be able to really look at how bring forth that technology embracement, transform the whole business from a traditional way into more, I call this high productivity way model, and work with the stakeholders in that whole supply chain ecosystem and try to drive a new competitive advantage. So the Chinese-US tension, in my opinion, is bringing a lot of opportunities to Southeast Asia. So I think the digital front for consumer is very good, but behind that industrialization changes, it's probably also important for us to see how we could bring a venture business into the whole horizon and helps to accelerate this whole pace. So I'm saying it from that point of view, is to really look at how to create new industry out from this restructuring process.
Thank you, Wei Ming. Any input from you, Jeff?
Sure. I think the early panelists spoke a lot about change, right? So one of the things that we talk about the pandemic is what is life like in the new normal, and certainly the new normal would mean things like social distancing, things like online education, and so you see a whole digitalization effort going on in many sectors, right? But I also think that it is also important for us as VCs to ask what has not changed, right? And in many cases there are many fundamental things that will still be needed. We need to address the arrest of single-use plastic. We need to transform ourselves into more sustainable and clean energy. Those are things that are not going to go away. And I think that there are, and so in many cases, our investment strategy as a deep tech firm has really, in a way, focused on solving these problems and hoping to generate great returns by doing so. I think the other thing when you talk about VC investments not just in Asia but around the world as well, is one of the more recent phenomena that we can't ignore, is this whole thing called SPACs, right? And I'm sure all the panelists around the table have at least one company in their portfolio discussing with a SPAC or multiple SPACs as to merging with a SPAC and all that. But from a VC portfolio perspective, you will see that all of a sudden SPACs have played a major role in providing exit opportunities to portfolio companies and have provided alternatives to sort of late stage growth capital raising. So instead of raising your Series C, Series D, you're now able to start negotiating with a SPAC and to accelerate the time frame to go public. A lot of people ask me this question after we listed this SPAC as to why and how this thing operates. And if I may just kind of highlight some of my thoughts around, or maybe one of my thoughts around how a SPAC actually works. If you think about it, there is historically a process that a company needs to go through in order to go through towards an IPO, right? They hire a bank, they do certain things, they get documents done, they get legality done, they file for approval and all that, and then they finally go out and fundraise. That process takes at least 6 months, and from the time you decide to do it to the time you actually go out to the market and ask for money, the market may no longer be there. So it's quite a risky and an expensive endeavor for companies to go down that route. The SPAC process simply sort of turns it around. Some other company goes out and raises capital from the market first, and then in a rather short negotiation and shareholder approval process, just merge the business together with the company that's already public. There are differences in sort of regulatory risk and exposures and all that, but by and large, the thing that it does is it reduces a lot of risk for all parties involved. Companies can get to a deal much more quicker than in which they could before, and I think that in itself opens a lot of opportunities for us as VCs in the market, and that kind of is the one of the reasons why we decided to go and list our own SPAC, and we did that earlier this year. So that is really I think the game changer. I think in late 2020, early 2021. Time will tell whether it can sustain. There are signs of the market overheating already. We hope it can continue to temper. So because indeed, I think the instrument and the vehicle itself is actually a very timely and useful, particularly for Southeast Asian startups where we don't really have that track record of IPOs. So we I think in 2020 we'll see quite a few of our Southeast Asian large startups back into SPACs.
Yeah, I think I agree with Jeff because this whole new horizon in SPAC is really opening up, more funding capacity. And at the end of the day, I look at it, the whole investment community is also evolving. And if you look at this whole market sentiment now is people are rushing into tech stock, right? So people wants to get directly to invest into technology companies. So this will really give a very broad opportunities for retail investors to participate in those innovations that we have been backing in the venture stage and try to bring them to the next stage.
Thank you.
Sorry, I just want to jump in here because this is an interesting conversation on SPAC. We have a couple of companies that are looking at it. I like the concept and I think that it's great. Obviously, there's some criticism about it being basically pump and dump kind of approach to fundraising. We don't know enough about it to make a comment on that. But I wanted to get from Jeff, because he obviously knows this better than I do. It tends to be more of a US phenomenon. And in Singapore, at least, I don't see our stock exchange being innovative enough to adopt such a regulatory changes to allow SPACs in Singapore. I don't know what do you say about what do you comment? What's your thoughts on that, Jeff?
I think it's an interesting observation that you make, because I think historically the regulators in Singapore have very tight control over the IPO process, and in a way the SPAC releases a lot of that control and passes it on to the sponsor of the SPAC. But as I do understand that they are trying to rush through some consultation paper to test the market, really, to see if there is indeed a take up for this. I actually believe it will be good for Singapore if we can somehow have some type of vehicle, because it will attract our regional unicorns to stay and to list within the region. And therefore grow the ecosystem. So we have an ecosystem that is much more self-reliant and dependent on U.S. capital markets, right? So if you take a step back and look back at China venture maybe 10, 15 years ago, they had that same dilemma. All the exits were actually in the U.S. It was really only when the local domestic stock exchanges allowed listing of these companies that they saw the sort of private equity VC market really grow. So I think it will be good for the ecosystem if we do develop that capabilities within Singapore. Not sure if that answers your question, Hsien Hui, because yeah.
So maybe I'll just add a little bit on my take on the Hui Jie's question, right? So I think in addition to what you guys have shared, one of the areas that I'm looking at and observing is along the line of digitization, especially in the area of a blockchain, right? So the digital asset management kind of team has taken off. And we are seeing in the market now very soon, Coinbase just filed S1 in SEC, and their last round was 8 billion, but right now talks are talking about valuation as high as 100 billion. So this is going to kind of change a lot of market understanding and interest in the whole space. Obviously, they are more B2C and the scale and size is a lot more bigger. But it's also bringing alongside with them other digital digital assets teams that are coming on board. And along with the SPAC team as well, we saw last year, Diginex, one of the SPAC that was listed, and they were also trying to target the digital asset management space, but they went on a listing without revenue. And today there are other more mature digital asset players with some revenues, and some of them are even profitable. So in my portfolio, actually, we do have a couple of these digital asset players, even including security token exchange. Two of them in Switzerland have got a new license, right? One of them called Stein's got a license from FEMA in Zurich to act as a fintech, like a private bank, and another got a license from Liechtenstein not to be the crypto exchange. And Singapore is also moving alongside in this digitization process. They're embracing blockchain. They're issuing out the digital token payment license. So I think with regulators coming on board and the capital market embracing the sector, I think 2021 we'll see many more of such assets that's coming onto the market. So I think this is an area that in my fund, we have invested and continue to monitor into this sector. Another sector, I think maybe just a small mention here, is in the area of digital infrastructure, the more heavy assets and data centers, edge computing, cloud computing, even in smart manufacturing, IoT, 5G, robotics. These are the areas that are traditionally not so consumer focused, but they are essential digital infrastructure that needs to be in place. And I think while it used to be more private equity driven or strategic investor driven, today there are some opportunities available for industry or vertical focus VCs to get involved. So these are the two areas I would just share a little bit more. Yeah, thanks.
Well, thank you very much, Fong Jek. From spec models towards digital assets and Bitcoin. So, just following up a very much a common question, very much to Fong Jek, since you're on this particular topic. For what's your view on the digital assets economy or cryptocurrency economy in Asia? There's a couple of movements globally around the world. You shared a little bit on Singapore. Do you think that's going to be a space that it's really going to grow significantly in Asia? Or what's some of your thoughts on that?
I think in Asia, that's the short answer is yes. It's going to continue. The trend will continue, and it will only grow. With more countries, regulators embracing the sector, more consumers, retail and even corporates will start to embrace this cryptocurrency. We have already seen in US, Tesla putting aside some treasury to buy Bitcoin. More and more companies are putting aside some treasury allocation to get into the space. So in Asia, we are actually a beneficiary, and there are a lot of adopters. Now, in the past, when Bitcoin was or the cryptocurrency was very hot during the ICO days, 2017. A lot of cryptocurrency exchange were not regulated, not the likes of the Binance, Huobi, right? A lot of companies, ICO companies who issued the tokens, they attracted a lot of users who traded on the unregulated crypto exchange. But with the Bitcoin price going down to a low of 3,006 last year, and now backed up to a high of 58,000, the whole sentiment have changed. And so, as I mentioned just now, with companies like Coinbase going for major listing, I think going forward, more and more this digital service provider, cryptocurrency companies, provided that are regulated by the countries, the more adopters will come to the space. And we already seen DeFi, right? DeFi that's taking up a lot of interest in the last 2 years. Today, traditional companies are looking at how to tokenize their assets, how to embrace this economy and make it work, and to even raise a lot of new funding for their business. So I think this trend will only continue, and we'll see more and more exciting models coming out to the market.
Thank you, Fong Jek. And the next question, very much to Gail, is do you see a specific trend for, say, female founders or so-called that are really good in specific industries? Or does your portfolio actually look into specific industries that women co-founders might naturally just do much better than men?
I'd say yes and no. I think the obvious area where female founders have an edge is the consumer space. Women make up almost 90% of consumer buying decisions, and that not only includes for themselves, and for their families, from healthcare to education. So I think when you have females on the team, it just is they see the commercial opportunity. They're much closer to it. There's no need to explain the problem to the investor, and they understand the end user. So that's one element where it is very obvious. But we do see the gender lens playing out in a more subtle way. For example, in the B2B space, that's also important, right? And I think if we zoom out and talk about the future that we want to live into and the innovations that are going to disrupt our lives, well, we need to design it with both genders or multiple genders in mind. And there are many historical examples where there was a missed opportunity for half of the end user market because an iPhone was too big for a woman's pockets, or voice recognition was trained on 80% male data. So these are a bit more subtle and under the surface, but I think it's important to have female innovators in the early stages of a company. And of course, we may all, well, maybe not, but what I see a lot in terms of data is that female leadership at all levels not only generates the financial upside, but it builds healthier work cultures. There's a greater focus on sustainability. And those are kind of our, we've got 10 years to address these problems. So I would say there's a very straightforward gender lens, but also a more far-reaching approach to it.
Right.
And then one more example I'll throw in is, if you talk about innovating HR tech, only a woman who has been on maternity leave and locked out of company email after 60 days knows the impact of what it means to have a distanced employee, right? And the likelihood of that employee coming back, if you were connected, is far higher, and the ROI for the business, for the employer, is also significantly higher. So I think perspectives like that can only be innovated by women, but then it has more far-reaching impact to, say, people on mental leave breaks, to remote workforces, because I think large companies are going to have a permanent shift in terms of their footprint. And what does that mean long-term for your HR strategy and people strategy?
Perfect, thank you. So in our audience, we have quite a number of investors, but on the other side, we do have quite a number of startups and projects that are looking to fundraise as well. So open up very much to the panel. What's your view on companies that's planning to fundraise in the existing climate? Do you think it's changed? Or how has it changed? Or has it not changed at all? And in your own specific investment mandate, what would you typically like to see different from previously before to currently right now? Probably we can start first with Wee Ming.
So we are family office backed fund, and we really look at helping those entrepreneurs in the long term. So my advice to the entrepreneurs, the founders, still the same, is that you have to really look at the whole journey and how can you really create the championship model. The good thing that I've been working the past 12 months is that there's more of these family offices coming to me, and we have formed a kind of like consortium. And MAS has been playing a very proactive role that putting all of us in a FO circles. So the family offices are beginning now to also invest, aside of investing into fund, also taking a direct investment. So my take is that there's going to be more of those family offices putting about 2 million, 5 million kind of check size like us. And I think if we are able to bring together with the VCs, then the check size can be larger. And therefore, I think the founders, I think they should have to also get in touch with more family offices to really find out how to raise funds from this new investor group.
Thank you, Wee Ming. And from the rest of the panel?
Happy to jump in here. I think on the practical side, despite Zoom, we are seeing deals taking longer to close. People just need time to get comfortable, right? And there's no replacement for that in-person touch. Similarly, rounds seem to be having a larger number of investors. We see proven founders still needing sort of a large, between 5 to 10 investors in a round. So there's pressure on check size and hence a much larger number of investors. And I think that does mean you need to think about, for founders, strategy for managing that sort of cap table and distribution. But yeah, these are practical things, meaning you have to start earlier, you have to cover a broader range of prospects, perhaps family offices too, to Wee Ming's point, depending on your sizing.
I was catching up with one of my former founders. We managed to successfully exit the deal. He went off and did something else for a while, and then part of that thing was sort of helping another startup fundraise and eventually exited as well. But he was telling me the challenges that he had, and I think that experience might be helpful for a lot of the founders. So, you know, there's nothing like being in a room with an investor, because especially for charismatic founders, they know how to manage that room. They know how to manage their audience. They can feel the body language. They can sense the body language. None of that comes across on Zoom. You have no idea what the other guy is thinking, and you know, an example would be just look at the screen that we are on today. We have fairly sort of faces looking back at you without much body language and indication as to whether there's interest or not. So I think the challenge is really founders need to think through in a virtual setting, in a Zoom meeting, how they are going to get that charisma across to the audience. I think there are a lot of methods that people can use, understanding at what point video is important. You know, one of the things that I know another of my founder does is he doesn't force, but he puts a lot of pressure on the other side of the room to turn on the camera. Because when he sees a face, then he can respond to whether the guy's nodding or frowning and all that. So I think the interpersonal dynamics over a virtual conference is something that founders need to really hone their skills on. And then the second thing, I think, for later stage companies, really, you know, talk to the VC firm that invested in you, or go talk to an investment bank, because I you know, one of the trends that we are seeing on the market is that soon there'll be more SPACs than deals, and that it's going to be a seller's market out there for late stage companies.
Yeah, I'll put in my 2 cents worth on this. I totally agree with Gail and Jeff on. Firstly, that definitely the time to closure is taking longer, and part of it could be as a result of having to go through Zoom. I mean, for us, we are taking longer to do our due diligence because a lot of the stuff we do is lab-based, and you know, we've got to see the labs, we've got to see the manufacturing facilities to get a certain comfort in it. Totally agree also on the charisma aspect of it. A lot of the founders that we have invested in are charismatic founders. That comes across when we meet with them, and because of that, to a certain extent, we sort of gloss over some of the gaps within their, their proposals and within sometimes even their financial statements. But when you're doing Zoom, everything becomes very dissociated, and we really start to go into very specific areas of what's the market sizing, opportunity, and sometimes you don't even look at the technology, which is very surprising given that we are a tech investor. You know, we like to say, you know, it's always about Occam's razor. You know, we look for the simplest solution to solve the problem, not the technology. So if your technology is the greatest, but you know, it's the most complex way of solving a very simple problem, then we probably won't be putting money into it. So I think that simplistically is how we are looking at the market today.
Thank you. And your views, Fong Jek?
I think I would just add that the expectation management would have to change on both sides, right? So from the founder side, maybe you know, they would need to spend a bit more time to communicate through multiple channels. I mean, Zoom is just one channel. Now through other networks, I mean, it's in Singapore case, at least you can still meet up in a small group. You can still have that face-to-face meeting. And you can reach out to different type of investors, because VC, more institutional VCs, kind of investors would have a more rigorous investment duty requirement, and with other, say, angel investors or high net worth individuals, or even family office or multi-family office, sometimes the dynamics is a bit different, the requirements is a bit different. So for founders, they have to kind of approach different investors to see which one would make sense for them. And obviously, the investment decision-making process is also different. And now, with the very buoyant capital market, the attention span and the preferences of investors is also a bit more diluted, right? So for founders, they need to know that when they get someone that's fairly interested in them, they need to really nail it in as soon as possible if they can. Otherwise, the attention will be distracted to other investment assets. And the one last thing will be just to see whether they can find a few that are more aligned with them in terms of the philosophy, the mindset, the interest in the sectors, and just work with a few rather than to go too wide, and talk to too many investors. Otherwise, the founder will get distracted and they may get confused. And work with a few that's willing to go with the founder for a longer period of time. Yeah, that would be what I would suggest. Yeah. That's it.
Thank you very much, Fong Jek. So we really have an interesting panel session today, talking very much from spec models to cryptocurrencies to sustainability, deep tech, food. So as we are conscious of time, if there's going to be one key parting note that you can provide to our audiences, whether it's it founder or whether they're an investor, what do you think would be that one key parting note that they can keep in mind for the next number of months? Maybe we can start first with Gail.
I'm going to get on my soapbox here. I think I would invite investors to open their minds. There is a lot of deep historical expertise along sector verticals. And, with what we're doing here, we're first movers in the region, but Asia's really behind Europe and the US in terms of GLI. And so maybe 5 years ago, there were a handful of female-focused funds in the US, and now there are 50, right? And the growth in a space like that, Asia is the blue ocean. And so it does require creativity, but I think that is one approach that's needed to see the future. Aside from the self-interest here, I think that in general, I would invite even my colleagues here to think about how you practice VC in a way that can serve all and serve all end consumers as well.
Thank you, Gail.
If I may add, just jump in with my take, right? I think I would appeal to both founders and investors and larger community to rethink what is the definition of value. A lot of times we look at value creation, but you can probably say it's human nature or just self-interest. Value creation has sometimes been subject to very short-termism, short-term thinking. Very charismatic founders who has done it many times in creating business, sell it, redo it again. The value shouldn't be just monetary value, right? There should be something that we can, both investors and founders, when we create value, it should be something that can be left behind for the world, for the social community, for the economy at large. It's not just monetary value, right? We need to create value on a sustainable basis and something value that can help industry to uplift themselves, for the economy to uplift themselves, and then we just need to resist some of the temptation from short-term value creation opportunities. So that would be what I would say. So I think if we can look for founders who can create value on a longer-term basis, broad-based, and some useful impact they can create beyond monetary, I think that would be very good. Yeah. Thanks.
Thank you, Fong Jek. Over to you, Ken.
Sure. It's a new world we live in. So what is life like in the new world? I think founders, investors need to recognize things will be different moving forward, but also be cognizant that some things don't change and some things will be the same. And as you're investing, or as you're starting your new company, or as you're exploring new opportunities, I think that it's important to be cognizant of what's new, what's changed, and what's not.
So what has not changed is relationship. I think it's very important that founders will continue to learn how to build relationship with stakeholders, and don't just go to investors when you need the money, right? So, wherever you need anything beside money, you can always give us a call, drop us an email. And, pre-COVID, I think we have talked about this before. We like to have beer together. And I think we should, anticipate to have more of these virtual beer sessions to talk through things. And I think that's probably, in my opinion, very key to sustainable relationship, so that, you'll be able to get the right resources at the right point in time.
It's always fun to be the last one and at the end of the session, because everyone has said all there is to say already. But the truth is, it's almost a cliche when people talk about how the world's biggest companies were all created during times of crisis or inflection points in humanity's long history. And I think that that's going to be the truth as well for COVID-19. If you're an investor, there are great things that can come out of this, in terms of the companies and innovations. If you're a startup founder, if you align yourselves to the global trends in the new normal that's been alluded to by Wee Meng, Jeff, Gail, and Fong Jek, then I think there are tremendous opportunities both as founders and investors. So looking forward to deploying more capital and looking at new ideas.
Indeed, in times of crisis, great opportunities and innovations do arise. So thank you very much to all our great panelists. I'm sure all the audience will definitely benefit from the insights they provided to them, both founders and investors alike. Looking very much forward to connecting with everyone moving forward, as well as all the audiences in Emergence 2021. Thank you once again, and looking forward to an exciting future and beyond. Thank you.